In this one, I want to go over 5 electric vehicle stocks that you might want to take a look at this year and going forward. And let's just get right into them with Nio, which is actually a Chinese company headquartered in Shanghai, although they do have many stores across China. And they have 3 main vehicles. One is called the EC6, which is like a 5-door, what you might call a coupe. They have the ES8, which is much larger. We'd call it a 4x4 in the UK, but in the States, you'd know it as an SUV. And then they have the newer, bigger, faster, and longer range ES6, which is actually selling pretty well for them. Now, because they're electric vehicles, those SUVs can go to 0 to 100 kmh, that's kilometers, in 4.7 seconds, which is incredibly quick for a very heavy SUV. But Nio itself really is a car brand. So they are holding themselves out as the car, the brand that you want to buy, a little bit like Tesla. It is a brand and not just a company within the EV space. They also have something called the EP9, which is actually a sports car, and I've actually seen one in person. They had one in the mall near me in Shenzhen, where I used to live in China, and it was beautiful. Absolutely amazing design, something from the future. Definitely really cool, but obviously not really a consumer product right now. And they even have something called Eve, which is actually a concept car, and it's really a completely autonomous driving car. So obviously not really going to be selling any of those right now, but certainly for the future when autonomous driving is the norm, then they are working on that too. Now, Nio, even though it is a Chinese company, is actually listed on the New York Stock Exchange. At least it has an ADR, which means that American investors can trade this stock. Something else interesting from Nio is they've recently started something called Battery as a Service, BaaS. This is obviously like software as a service, which is obviously a popular business model. Battery as a service is the same. So rather than buying a Nio car and then having the battery inside that maybe degrades or isn't that great right now, you can actually rent the battery. So what you do is you take about $10,000 off the price of a car and you pay about $150 a month for your battery. Now, over time, when new batteries come out that are faster, more efficient, and also importantly have more range, a longer range for the car, then Nio can swap that out for you. So you basically just pay a monthly service fee for the battery, and then when you want to upgrade, they can do that. I think that's a really cool idea, and it definitely will encourage more people to adopt battery-powered vehicles over time. Now, in May 2020, Nio was actually the 5th largest electric vehicle maker in China. So yeah, definitely not the biggest, but it is growing. Actually, in May 2020, they sold the most cars ever and then beat that again in June 2020. They hit a new record, shipping 3,740 cars in 1 month. And for the first time ever, they actually shipped more than 10,000 cars in a quarter. And I know what you're thinking, that's not a lot of cars. And yeah, you would be right. But Nio is a small company, a growth company, just like the electric vehicle space in general. So Nio right now is valued at about $24 billion. And that is a high price considering that this company doesn't make any profits yet. It's still a growth company. And even though revenues are growing, profits aren't there. So it's really difficult to give this any sort of value. Although some analysts, for example, Morgan Stanley, came out recently and raised their price targets for the stock, saying that they were overweight the stock and like the stock. But if they keep this trajectory going and keep selling more cars, especially in their home market, which is a big growth market for electric vehicles, then who knows what the future may hold. Next on this is Helion, and this is very different as a company. They actually recently listed via a acquisition from a SPAC or a SPAC, which is a special purpose acquisition company. So basically that company was listed on the exchange and then acquired Helion, and the ticker symbol for this company now is SHLL. So Helion is completely different and, in my opinion, I guess a little more risky than those car brands that have a bit of brand value. Helion really just wants to be a service provider and try and get trucks. This is huge haulage trucks, class 8 trucks in the States to move over from diesel to some renewable energy, either in the form of batteries, natural gas, or hydrogen gas powered trucks. So this really isn't a typical EV brand. They're not really making the trucks. They're not the brand of truck or car, but they have some technologies that they want to sell to existing truckers and truck operators. The advantage of this technology though is that they don't need a massive battery to power the axles and the wheels. So that means that the truck can be lighter, so you don't have to reduce the amount that you haul, which is definitely a positive for the trucking industry. Natural gas, which is definitely lower carbon than diesel, actually does have quite good infrastructure in the States, more than hydrogen fuel cells. And to be honest, it may be a cheaper way for existing truckers to actually change the fuels that they're using. So Helion might have quite a big business in the next few years. This is definitely a small company right now, valued just at $1 billion and a $38 share price, and speculative because it's just pre-profit again, but they are confident that income streams are going to be coming very quickly in the future. Nikola is in the same space as Helion, big trucks, class 8 trucks, long distance, definitely not batteries only. Nikola are totally different because Nikola actually make the truck. They are a truck brand or a car brand themselves, so definitely different to Helion. Nikola is valued at $14 billion right now, and they are pre-profit, and actually the only revenues that we know that they are going to be getting is this one order that they just announced with Republic Services. They have said though that more are in the pipeline and they will announce them when they are ready. So in terms of future revenues, actually it kind of looks quite positive for them, but we'll see what they come out with in the next few years. Though those revenues are coming, as I said, they don't have enough cash, so they will have to come to the market either through an equity cash raise or maybe by issuing debt. Hydrogen fuel cell and refueling doesn't have the best infrastructure right now, so that definitely is a limiting factor right now, but that will change in the future. But when it comes to commercial vehicles, this really is right now the only and best way that we have, because batteries just don't have the range and they're also incredibly heavy right now anyway, which means that truckers don't like them because they can carry less haulage, which is obviously not very efficient for them. But definitely Nikola as a brand in the trucking industry and the corporate space is pretty big for what it is. But again, no profits and a $14 billion market cap. Number 4 on the list is obviously Tesla, and you can't make an EV video without Tesla. They are without a doubt the biggest, best known and most mature EV company. Tesla is actually the only EV maker in this list to have made money. Yeah, not annually, but actually if you take it quarter by quarter, Tesla have made money in a couple of their quarters. Annually, they are still making losses because they are reinvesting absolutely everything into their growth, which is exactly what you want them to be doing. Tesla also has something that none of the other EV makers in this list, or to be honest, something that most companies don't have, and that is an absolutely star brand. Tesla is pretty much like Apple or Nike. It already has billions of dollars of brand equity built in. When you say electric car, everyone will think Tesla, and that is literally worth billions of dollars and should definitely not be underestimated. They can turn this brand into pretty much anything in the tech or electric space. So yes, apart from Tesla making the Model S, Model 3, Model X, and Model Y, Tesla also has Tesla Solar, which will come and put solar panels on your roof, and also Tesla Powerwall, which is essentially a big battery that is stuck onto the side of your house that will take all of the energy from that solar and store it up, giving you up to apparently 7 days of usage, although that obviously will depend on how big your house is. Tesla's business model and what they've done so far is really nothing short of amazing, but it is valued that way. It's currently valued at $400 billion, which is more than any other car company in history. Well, not just more, but absolutely country miles ahead of any other car company. Ford, at its height in 1999, was valued at about $90 billion US, which is nowhere near what Tesla is valued at now. And Tesla still doesn't sell that many cars. However, things are different at Tesla. Firstly, the profitability of Tesla is far higher than Ford. They make about double the gross profit than Ford do on normal petrol cars. So that is a very big factor. Also, Tesla has other companies. They have Tesla Solar, Tesla Powerwall and battery, and a lot of other technologies as well that are going to be worth a lot of money going into the future. Not to mention all of the driverless data and autonomous driving data that they have. Having said that though, at a $400 billion market cap, Tesla is priced to be one of the most influential, biggest companies in the world in the future. So they do have to deliver. And in at number 5 is not a tech stock specifically, but actually ETFs. And this may be a much better way to invest in the space in general. Definitely less risky than investing in one stock or maybe 2 or 3 stocks, giving you some diversification amongst many different stocks and companies. Depending on where you live in the world, you may want to choose a couple of different ETFs. For example, if you're in Europe, you might want to go for the iShares Electric Vehicles and Driving Technology ETF. This one basically has Tesla in there and then a few other companies that are along for the ride. So they have Nvidia, which is a chip maker, definitely big space for them to provide chips for electric vehicles. Suzuki, Hyundai, Kia, Samsung, GM, Ford, Volvo, and BYD, which is a Chinese firm that actually make all the electric taxis in Shenzhen and the buses as well. And also Autoliv, which make airbags. So as you can see, your money is diversified amongst many different players in the automotive industry that should benefit from electric vehicles in the future. Tesla is the only company in this list that is held within that ETF though. So if you're not interested in Tesla, then you're not going to buy this ETF to hold those other companies. If you're in America, you might want to try something called DRIVE. At least that's the ticker, DRIV. The name is the Global X Autonomous and Electric Vehicles ETF. This ETF holds 2 of the companies in this list. The first is, of course, Tesla, and the second is Nio. But they also hold a lot of other well-known names in the automotive space. So GM, Honda, Hyundai, Ford, and Kia. These are low-risk companies that do also have a future in the EV space because they are starting to make EV as well. So that is 4 electric vehicle stocks and also a couple of ETFs that you might be interested in. Definitely a growth space. The stocks themselves are quite risky, most of them right now because they're pre-profit or even pre-revenue. But in terms of ETFs, they may offer you a good way to take advantage of a growing industry overall while reducing your risk. Anyway, let me know what you think of these companies and ETFs. Are there any on the list that you would put on there that I missed, or do you hold any of these or want to get into any of these? Let me know in the comments as always. That's it for now though. Thank you for watching. Thumbs up if you liked it, and I'll see you in the next one.